There are only two ways to make money in our modern world: by working either for yourself, or someone else, or by having your assets work for you. If you keep your life savings in your back pocket, or under a mattress instead of investing, the money doesn't work for you and you'll never have more than what you save, or receive through inheritance. Conversely, investors generate money by earning interest on what they set aside, or by buying assets that increase in value. It doesn't matter how you do it. Whether you invest in stocks, bonds, mutual funds, options, futures, precious metals, real estate, a small business, or a combination of assets, the objective is the same: to make investments that generate additional cash. As the old expression goes, money isn't everything, but happiness alone can't keep out the rain. Whether your goal is to send your kids to college or to retire on a yacht in the Mediterranean, investing is essential in reaching your financial objectives in life. Managing investment goals. Investment goals diverge, depending on age, income, and outlook. You can further subdivide age into three categories: young and starting out, middle-aged and family building, old and self-directed. These segments often miss their marks at the appropriate age, with middle-aged folks considering investments for the first time, or the elderly forced to budget, employing the discipline they lacked as young adults. Income provides as the natural starting point for investment planning because you can't invest what you don't have. The first career job issues a wake-up call for many young adults, forcing decisions about IRA contributions, savings, or money market accounts, and the sacrifices needed to balance growing affluence with the desire for gratification. Don't worry too much about setbacks during this period, like getting overwhelmed by student loans and car payments, or forgetting that your parents no longer pay the monthly credit card bill. Outlook defines the playing field on which we operate during our lifetimes and the choices that impact wealth management. Family planning sits at the top of this list for many individuals, with couples figuring out how many kids they want, where they want to live, and how much money is needed to accomplish those goals. Career expectations often complicate these calculations, with the highly educated enjoying increased earning power while those stuck in low-level jobs are forced to cut back to make ends meet. It's never too late to become an investor. You may be well into middle age before realizing that life is moving quickly, requiring a plan to deal with old age and retirement. Fear can take control if waiting too long to set investment goals, but that should go away once you set the plan into motion. Remember that all investments start with the first dollar, whatever your age, income, or outlook. That said, those investing for decades have the advantage, with growing wealth allowing them to enjoy the lifestyle that others cannot afford. Investing should never be limited to the buying and selling of stocks, bonds, mutual funds and exchange-traded funds, or ETFs. To achieve genuine diversification, investors cannot ignore the fast-rising alternative investment sector. Investors in alternatives deploy trillions of dollars globally, and in the decade ahead, alternatives are poised to take center stage in capital markets thanks to their appeal to sovereign and public pension funds. After analyzing global trends impacting the industry, I believe these 5 alternative investments are likely to perform particularly well in the coming years amid growing recession talk and high geopolitical tensions. But first, what are alternatives? A look at alternatives. Broadly speaking, alternative investment assets encompass all investments outside the traditional classes of stocks, bonds and cash. Therefore, everything from luxury items, such as wine and fine art, to precious metals, private equity, commodities and real estate falls under the banner of alternatives. Alternatives are legitimate investment vehicles that can pad your portfolio by adding true diversification. Their primary benefit is in redistributing risk, such that your returns aren't correlated to stock market performance. Instead, alternatives provide a buffer against economic uncertainty and declines in the stock and bond market. Alternatives operate much the same way as traditional stocks and bonds. The key to successfully investing in alternative assets is to start small and diversify across a wide variety of asset classes such that your returns are maximized and risk isn't overexposed to price volatility. 1. Precious metals such as gold and silver have a lot going for them. they are tangible hedges against inflation, are highly liquid and store value safely over time. As rescue assets, precious metals can bail out your portfolio in times of economic downturn. With market sentiment uncertain and wide speculation of a looming recession in the year ahead, gold and silver are exceptional hedges against stock sell-offs. However, it's important to note fees if you go the route of gold ETFs or mining stocks. To save on fees, investors can gain exposure to gold through direct physical purchasing. 2. Equity crowdfunding. Just as owning a business can be considered an alternative investment, so too is owning a slice of someone else's business. Today, a growing number of startups and fledgling businesses are selling shares of their company on crowdfunding platforms, such as AngelList and Seed Invest. And unlike Kickstarter, investing in seed-stage startups via equity crowdfunding platforms allows you to own a small part of the company. Investing in equity crowdfunding presents a considerable degree of risk. In the event that the company flounders, so does your share in the firm. However, a company's financial success can result in considerable gains for early-stage crowdfunding investors. 3. Cryptocurrency. Speculation of stock market downturn and an impending global recession puts cryptocurrencies among the best alternative investments. Digital currencies are excellent stores of value that are untethered to stock performance and top indices like the Dow Jones or S&P 500. If you see through the media frenzy and sensational headlines, you might have noticed that the regulatory environment for cryptocurrencies is maturing on a global scale. As the trading infrastructure improves, regulations standardize, and institutional and retail players drive adoption, I expect cryptocurrencies will perform well throughout the early 2020s. 4. Real estate. Physical real estate remains one of the world's leading millionaire makers. Investing in real estate requires patience, skill and a little bit of luck, but it is a relatively safe investment vehicle that performs relatively well during all stages of the economic cycle. Major housing market corrections are comparatively rare, with only 7% of real estate market dips causing a decline in real prices of 20% or more. 5. Tax liens. During recessions, many property owners default on their mortgage and fail to pay property taxes. To recoup their losses, many municipal governments sell tax liens at auction, which grants the right to collect the tax amount owed by the property owner plus interest. Buying tax liens can allow investors to collect recurring income from their property or potentially even own the home in the event of a foreclosure for a small fraction of its market cost. What's driving the alternatives market? The 2020s will see radical changes in the asset management landscape. PwC market analysts attribute alternatives' rising tide to three major catalysts: the shift to individual retirement plans, the emergence of new sovereign investors, and the increase in high net worth individuals from emerging markets. Consequently, the alternative asset market is forecast to reach as high as $15 trillion by the end of this year. For investors looking to capitalize on this burgeoning industry, alternative assets such as precious metals, cryptocurrencies, real estate, equity crowdfunding and tax liens could be good places to start.